Is Rocket going to blast off into space as if Elon Musk had developed it, or is it going to crash and sink into the ocean as if it was fired by North Korea? Hey guys, thanks for tuning into this quick sip. My name is JT with Investments and Refreshments, and today we're talking about Rocket. So Rocket Mortgage was founded in 2015 by Quicken Loans, the nation's leading mortgage lender. Rocket Mortgage blasted onto the scene like a rocket because they allowed people to have more control over the mortgage process, all from their own home. I uploaded a video about Rocket about a month ago, and here's what I said. Let me get this out of the way. It's hard to know when a short squeeze is at its peak. So anytime that you get involved with a short squeeze, it is going to be risky. I'm not sure exactly where the short-term short squeeze can take this stock. So I don't feel comfortable giving a 1 month price target, but as far as a price target by the end of the year, I'll say that by the end of the year, taking into account the rising interest rates, the uncertainty of the housing market, where we're going to be at with the pandemic by the end of the year, I would say that the price per share for Rocket will fall to a more reasonable level, which will be $25. While I still agree with everything I said in that video, that was about 3 weeks ago now, so things have changed. Rocket has come down to a price that I think is more of a fair value. So I think if someone wanted to invest now and they have conviction that they should do their own research and make that decision. Now, I still have my hangups with the company, obviously. I think that a big portion of their profitability last year came from refinancing, and as interest rates continue to go up, I believe that less and less people are going to be wanting to refinance. And you could have already seen most of the people who would be interested in refinancing already have done that, given that interest rates were at an all-time low. But I don't want to discount the fact that they had $9 billion in profit last year and enough cash flow to pay out a $2.2 billion dividend to their investors, which was about $1.11 per share. And whenever you crunch the numbers, that was about a 4.7% one-time dividend, which is great. And I do believe that it's important to try and maintain your investors' bullish outlook. Was it ill-advised? I don't know. Maybe their board knows something that I don't know. Maybe they have plans to parlay their success from the refinances that we saw last year into something bigger. We'll have to wait and see. I don't think that right now the price is astronomical. You know, maybe a more fair value would be that $20, $19 mark. But listen, if you go to Wall Street Bets and you filter for DD and then you sort by new, you're going to see Rocket, GME, AMC, GME, Rocket. Rocket is being talked about right now. There's a lot of buzz around Rocket. I mean, is it possible that some smooth-brained apes hear a company name like Rocket and they're like, oh, like the emoji? Yeah, yes, that is possible. But that's also why I'm saying that the hype around the stock could provide a bit of a comeback. You might see the share price go back up to $30 briefly. And if you want to be on that wave, then, you know, do your research, do your due diligence, and make a decision for that as well. I don't believe that we're going to see the same amount of success in 2021 that we saw in 2020. I think that we're probably going to move back towards what we'd seen in 2019. Still, in 2019, they had about $1 billion in profit. So they are profitable, and that's something to consider as well. You know, there are obviously a lot of things to consider, but you have to admit that the refinance portion of their business, which they don't disclose what the breakdown is as far as how big of a piece of the pie that is, but I would venture to guess that a lot of their success last year was due to refinancing. Now, if we move back, like I'd said, to 2019, 2021 could fall somewhere between 2019 and 2020. I'll say right now at the current share price, I would say to hold. If your risk tolerance is higher than mine, then feel free to buy, because I almost guarantee that a second wave is coming. That being said, I will say if the share price gets near 30, above 30, I would recommend selling, because at that point, it would be overvalued. If you consider the first squeeze that we saw, the moon, then we could see it blast off at least into the stratosphere. I'm going to continue expanding my positions in infrastructure, energy, clean energy, and it is a great time to buy tech right now. Short term, it might not be a horrible idea to buy some put options for tech stocks, but long term, this is a great time to buy tech stocks. Also, if you want to take advantage of the economy opening back up and the boom that we're seeing in building and construction, I would recommend looking at some stocks that deal with sand, some stocks that deal with cement, maybe Cemex, maybe Silica, and do your research and make a decision on if you want to get involved with any of that. I'll be making a longer investments and refreshments full video about what's happening with real estate and what stocks that I believe that people should be looking at right now. But just some foreshadowing for that video, I'm going to be recommending that people explore some options that deal with the online real estate marketplace or online real estate brokers. Thank you guys so much for watching. I hope you're able to get something out of this video. If you liked this video, please leave a like down below. Consider subscribing, hitting that notification bell icon. If you have any ideas for future videos or feedback for this video, please leave those in the comment section down below. I appreciate it. Thank you guys so much, and good luck in your